In this session, we're going to talk about agency law. Agency is a very essential part of business. You have, as we'll learn in a later week, different types of entities that are recognized in law. Um, a corporation or an LLC or an S corp, they are their own living entity. They're a recognized entity that has legal status. That is an entity and not a person. So without the agency relationships that we're going to talk about, corporations, LLCs, S corps can't function and carry out their business or their operations. A corporation can't sign a contract. A corporation can't make a decision of when to hire someone. A corporation can't decide to do things. Um, they have to carry that out through persons that have authority to act on behalf of the corporation, the LLC, the S corp. And this is where the agency relationship comes into play. Without an agent, corporations could not function or operate. So the agency relationship is comprised of two people. You have the principal and the agent. The agent is the one who's vested with the authority or the power to act on behalf of the principal. The principal in the scenario that we've been talking about would be the corporation. The agent would be the employee who acts on behalf of the corporation. So that the agency relationship, we talk about an agent and we talk about the principal. There are two types of agency relationships that we're going to talk about here. You have the employer-employee. The employer would be the principal. The employee would be the agent in that example. Sometimes you may see it in the book or elsewhere where they refer to this as the master-servant relationship. That's the old common law term for it. They didn't say employer employee, they referred to it as the master as the employer and the servant as the employee. The second type of agency relationship that you may have would be the principal independent contractor. Um, so, what's the distinction between these two relationships? What's the difference between an employee and an independent contractor? Well, there are a number of differences, and here we're going to talk about just a few of them. From the standpoint of legal liability, there's a legal doctrine known as respondeat superior. That is a term for basically vicarious liability, meaning that the employer under the law is liable for the wrongful conduct or acts of their employees when the employee is acting within the scope of their employment. So just because an employer employs an employee, if an employee on the weekend not working has a car accident, the employer is not automatically liable. Um, but if the employee was driving and was working for the employer at the time of the car wreck, then under this doctrine of respondeat superior, the employer may be liable for the wrongful act of the employee in that accident. But when you compare the employee to the independent contractor, under respondeat superior, that only applies to employees. So an employer would only be liable for the wrongful acts of employees in the scope of their employment. In contrast, the employer, i.e. the principal, who's contracted with somebody to do some work, would not be liable for the wrongful conduct or wrongful acts of that independent contractor. The independent contractor, as it denotes, there's some form of independence. And so that independence is enough that there's no vicarious liability to the principal. Um, Another area is taxes. For employees, employers are required to withhold certain taxes. If you get your paycheck, you look at it as an employee. They hold out taxes for income, unemployment, and Social Security. Employers are obligated to do that. Principals do not have that obligation to make any withholdings from an independent contractor. Instead, the independent contractor is the one who's obligated to withhold and pay those taxes. So both of these relationships are treated differently for taxes and legal liabilities. Also, it's very common that the benefits are different. Employees usually participate in fringe benefits, including paid time off, retirement benefits, insurance, could even be things like paying for gym memberships and other perks that are available to employees. Independent contractors do not participate in those fringe benefits. Usually, they just get paid whatever agreed amount for the work that they've been hired to perform, and that's it. They don't get any insurance, they don't get any retirement, they don't get any paid time off. They just get paid whatever is agreed to. Further, there is a difference between wages. Under the Fair Labor Standards Act, which we'll talk about in a later week, it's a federal law that requires employers to pay employees at least minimum wage and pay them for overtime wages. There are exceptions to the overtime wages for people. They're referred to as an exempt class. And so if you meet an exemption and are not required to be paid overtime, then you wouldn't be paid overtime. But for employees who are not exempt, and there's a large class of people that are non-exempt employees, they're entitled to be paid overtime wages, and that's defined as any hour worked in a week that's beyond 40 hours. So if you work 42 hours, they would be entitled to 2 hours of overtime pay. And overtime pay has to be at least 1.5 times the regular rate of pay. So if they're paid $10 an hour, 1.5 times $10 would be $15. So for those 2 hours, that employee would be paid $15 an hour. Non-exempt employees are entitled to overtime wages. Independent contractors are not entitled to overtime wages. Like I mentioned a moment ago, under the benefits, they're just paid whatever they're agreed upon as their payment for the services that they're performing. They would not be entitled to overtime wages. Employees would be entitled to overtime wages. Lastly, another difference between these two relationships is that employees who sustain an on-the-job injury would be entitled to workers' compensation benefits. An independent contractor would not be entitled to workers' compensation benefits. Workers' compensation laws, at least it's controlled by state, it's not a federal statutory scheme, but here in Tennessee, workers' compensation law provides that employees who sustain an on-the-job injury are entitled to receive compensation for their impairment, for their injury. And so there's a set form of calculation that takes place in which you determine and place a value on the permanent impairment or the temporary disability that the employee sustained. But it applies to employees. If you're an independent contractor, you would not be entitled, more than likely, you would not be entitled to receive workers' compensation benefits. So as you can see, there's a big difference between how employees are treated and how independent contractors are treated. So let's take an example here. You have Brandon who owns a local sporting goods store. Brandon and another person, Mark, they are the ones who work at the store each day. They're the ones who greet the customers that come in, that help them find the baseball bat they need, the right pair of cleats, whatever, and they're the ones who run it. But one morning, Mark and Brandon arrive at the store and they find a water leak. Brandon calls a plumber named Will. Will comes later that day and is at Brandon's store for 4 hours, and during that time, Will repairs the water leak. So compare and contrast Mark and Will. Mark would be an employee. He's at the store every day that it's open. He works at the owner's direction. He's an employee. In contrast, Will is an independent contractor. Will is coming that one day. He's not regularly at Brandon's store. He doesn't follow Brandon's directions. Brandon doesn't tell him how to fix the water leak. Brandon just lets him in and agrees to pay him for repairing the water leak. It's a simple illustration, but it lets you see who's an employee and who would be considered an independent contractor when you're looking at the relationships involved in this hypothetical. So it becomes a question of how do you distinguish between when a person is an employee and when they're an independent contractor? Well, there's no bright line test. There are often, as we'll see in a slide in just a minute, a number of factors that courts would consider to determine whether a person is an employee or if they're an independent contractor. So it's a facts and circumstances determination that's made on a case-by-case basis. Again, there's no bright line rule. You have to look at the facts that make up the case before you and analyze those facts to determine if a person is an employee or if they're an independent contractor. It's also important to note that how the parties define their relationship or how they refer to it is not dispositive. It may have some meaning, but they're going to, again, look at what are the facts and circumstances um, surrounding this relationship. Just because the employee and the employer say, or the the people, the workers and the employer say it's an employee-employer relationship, isn't going to be determinative. There are a lot of times that people are misclassified. As you could see from all the benefits and the lack of overtime pay and not having to provide workers' compensation, not having to withhold taxes, you could see how it would be very incentive oriented for the employer to classify somebody as an independent contractor rather than an employee. They would avoid legal liability. They wouldn't have to withhold taxes. They don't have to provide benefits. They don't have to provide workers' compensation coverage, and they wouldn't have to pay overtime. All those things weigh in favor of an employer characterizing as a worker as an independent contractor. Just because they define the relationship as one way doesn't mean that's truly what's happening. So courts look through the title that the worker and an employer place on the relationship and instead consider the following factors. So here are the factors that they look at. And there could be others at times that are considered, but these are the main factors. Control. When we say control, we're talking about who controls the details of the work. An independent contractor would be expected to have more independence in determining their work. So look back at Will and Mark. Will, as the plumber, has a lot more freedom in determining how he does his work, how he goes about repairing the pipe. Mark, on the other hand, works at Brandon's direction as an employee in the store. So who has control of the details of the work? Is there someone that's directing this, or is there really an element of independence for the worker? Next, you look at the type of work. In the example that we were just talking about, there's a big difference between the work that Will did for Brandon and what Mark did for Brandon. Mark worked in the store selling goods, helping people check out. Will did not work in the employer's business. He was there to perform the repair of the water leak. So is the type of work similar? Or is there a difference between it? If there's a difference between it, it's more likely that it will be considered to be an independent contractor relationship than an employer-employee. Supervision is another big factor that you can consider. Is the work that's performed usually one that would be supervised by the employer, or is it one done independently? Again, going back to the example we just talked about, Will's work is something that would not be usually performed under the supervision of Brandon. Will has that autonomy, that independence as the plumber to work and repair the water leak. Brandon, on the other hand, doesn't have anything to do with the water leak. He runs a sporting goods store. Mark works at the sporting goods store, so Mark is performing work that would generally be under Brandon's supervision. Skill. What degree of skill is involved? The higher degree of skill involved, the more likely that it is an independent contractor relationship. The more skill that they have and they exercise, the more that it tends to indicate that there is some degree of autonomy there as opposed to working for the employer. Another one is who provides the tools and equipment. If Will brings his own equipment, it's much more likely that he really is an independent contractor because he's providing his own stuff. He's not, Brandon's not providing him the tools. He's not providing him the equipment for the work. Mark, on the other hand, any goods that are sold, any elements that he has to use, like a computer to look something up to order or a register to check somebody out, that's all stuff of Brandon's. That's not something of Mark's. So who brings the tools can be an indication as to whether there's an element of autonomy and independence which usually is associated with an independent contractor relationship. Next, you look at the duration of the work. If it really is an independent contractor type relationship, they're normally not somebody who's going to be working there all the time. Now, they may be working there for an extended period of time on a job, but they're not a normal, regular, everyday employee. So if you look at the example we've talked about, Mark, he's there for the duration. He would presumably be an employee at will who is there working until he either is terminated by Brandon or he decides to leave and take a job somewhere else or retire. Therefore, Mark, the duration of his employment is indefinite until that relationship ends. Will, on the other hand, is only there for a short period of time, and he's there contracted to do the simple repair of the water leak and be done. You also look at the form of payment, the method of payment. If you're paid by, time based on like hours, or paid a weekly amount, that's more indicative of a employer-employee relationship. But if you're paying them by the job, like Brandon would be paying Will by the job to perform the repair of the water leak, he's paying him for that job. He's not paying him by the hour every week. So the form of and method of payment can help shed light onto whether it's really an employer-employee relationship or an independent contractor relationship. And lastly, you got to analyze, and this makes a lot of sense, is the person, the worker, performing services for anyone else? If they're performing services only for one person or one entity, it's much more indicative of an employer-employee relationship. There's a lot more indicative of an independent contractor relationship if the worker is performing services for multiple people or entities. So going back to the example that we just looked at, compare and contrast Mark. Mark is performing services for one person, Brandon, in his sporting goods store. On the contrary, Will is performing repair work for multiple people, multiple entities, and so his relationship is much more indicative of an independent contractor because he performs services for other people. So, like we were alluding to a moment ago, based on the differences that we talked about between the employees and independent contractors, employees are often tempted to try to classify workers as independent contractors. It allows them to avoid things like the tax withholding obligations, not have to provide the benefits that we talked about, or workers' compensation, and they may be able to avoid overtime wages. For that reason, the relationship of an independent contractor is much more favorable to the employer. Employers, however, they have to be careful that they accurately and appropriately classify workers. The Department of Labor and the IRS can have the authority to come in and audit employers and to we talked about looking at these factors and looking at the facts and circumstances of the actual relationship, and they will do that and may determine that they have improperly classified the relationship. They may have said, these people work for us, but they're really independent contractors. The IRS, the Department of Labor, may say, no, we disagree with that. You say they're independent contractors, but based on the facts and circumstances, considering the factors that we just talked about, we conclude that these workers are really employees. The book talked about this in the example of Microsoft in the 1980s. There were a number of people that Microsoft employed. Microsoft said they were independent contractors. You go back to some of the stuff that we were talking about, they were only performing work for Microsoft. They were working there for a long time. Things that were indicative of an employer-employee relationship, not the independent contractor relationship. And misclassification of workers has been a very hot button issue for the Department of Labor over the last few years. They released some guidance really hammering home this autonomy and independence that they're looking for through these factors that we considered. And they believe that employers have misclassified a large number of employees or workers as independent contractors instead of employees. And so for that reason, the Department of Labor for the last few years has been focused heavily on trying to audit and determine where workers have been misclassified. So some people have looked at this and thought, well, maybe the right way to avoid these misclassification problems is we'll hire temporary workers from a staffing agency. Well, that's a good and smart move, initially at least, but it's not a solution to the problem. Um, First, you usually have a higher cost involved. Staffing agencies, um, the way it works is the staffing agency will pay workers $10 an hour to work at somewhere, but for the staffing agency to make money, they're charging you for that worker being provided there, and they may be charging you $15 an hour for that worker. And so um, you're paying a premium to use a staffing agency. Now that may be a make business sense for you as an employer, but the arrangement is not necessarily the most cost effective when you compare it to avoiding some of the fringe benefits or workers' compensation, things like that. There is a higher cost associated with using temporary workers through a staffing agency. Um, and probably most important is that there's a notion or a concept known as joint employment. Under the joint employment rule is the employer and the staffing agency are both viewed as employers of the worker. So even though the employer may think, well, he's really working for the staffing agency who's assigned him here, under the law, they'll look at it and may classify it as a joint employment relationship. And if that happens, then the employer has to treat the temporary worker as an employee, and you lose those benefits of them being perhaps considered an independent contractor.